Question 1. What is the primary purpose of the principle of indemnity in insurance contracts? A. To ensure that the insured receives a profit after a loss occurs. B. To restore the insured to the same financial position they were in prior to the loss. C. To transfer the risk of loss from the insurer to the insured. D. To allow for the adjustment of premiums based on the insured's claims history. Answer. B. To restore the insured to the same financial position they were in prior to the loss. Explanation. The principle of indemnity is fundamental in insurance, aiming to ensure that the insured does not profit from a loss but is instead restored to their previous financial position. This principle is central to property and casualty insurance, where the goal is to compensate for actual losses without allowing for any enrichment. This is consistent with the legal concept that the insured should not receive more than their actual loss, preventing moral hazard. Indemnity is closely related to the concepts of actual cash value (SEV) and replacement cost, which further illustrate how losses are evaluated and compensated. Question 2. Which of the following statements accurately describes the concept of insurable interest in the context of property insurance? A. Insurable interest requires the insured to have a legal stake in the insured property at the time the policy is issued and when a claim is made. B. Insurable interest allows the insured to take out insurance on any property without being the owner or having any financial stake in it. C. Insurable interest only applies to property insurance and not to life or health insurance policies. D. Insurable interest is only required at the time of claim settlement, not at the time of purchasing the policy. Answer A. Insurable interest requires the insured to have a legal stake in the insured property at the time the policy is issued and when a claim is made. Explanation. Insurable interest is a crucial requirement in insurance, ensuring that the insured has a legitimate financial interest in the property or life being insured. This concept serves to prevent insurance fraud, as it aligns the insured's interests with the insurer's. In property insurance, the insured must demonstrate ownership or a financial stake at both the inception of the policy and at the time of loss. This means that if a loss occurs and the insured has no insurable interest, they cannot recover from the insurer. Insurable interest also applies to life insurance policies, where the policyholder must have an interest in the life of the insured. Question 3. Scenario-based. Mr. Adams recently purchased a new commercial building for his business. He obtained a commercial property insurance policy that covers property damage but not business interruption. A fire breaks out, causing significant damage to the building. After the incident, Mr. Adams discovers he will not be able to operate his business for several months while repairs are made. What should Mr. Adams consider doing next regarding his insurance coverage? A. File a claim under his property insurance policy for the fire damage and expect coverage for the lost income. B. Review his current insurance policy for any potential endorsements that may cover business interruption losses. C. Purchase a separate business interruption insurance policy after the loss has occurred to cover the losses during repairs. D. Accept the loss of income as a business risk since he did not purchase business interruption coverage. Answer. B. Review his current insurance policy for any potential endorsements that may cover business interruption losses. Explanation. In this scenario, Mr. Adams's current commercial property insurance covers property damage but lacks coverage for business interruption, which could significantly impact his revenue during the repair period. It is advisable for him to review his policy for any endorsements or riders that could provide additional coverage options for business interruption. This approach is in line with best practices in risk management, where businesses should evaluate their insurance coverage regularly and ensure they have the appropriate policies in place to protect against all potential risks. Purchasing a business interruption policy after the loss has occurred, option C, would not be viable, as insurance is based on the principle of indemnity and cannot retroactively cover pre-existing losses. Question 4. Which of the following best describes the concept of subrogation in insurance? A. The transfer of an insurance policy from one insurer to another. B. The process by which an insurer can recover costs from a third party after paying a claim to the insured. C. The inclusion of additional coverage options in an existing insurance policy. D. The requirement that the insured must prove loss before a claim can be made. Answer. B. The process by which an insurer can recover costs from a third party after paying a claim to the insured. Explanation. Subrogation is a fundamental principle in insurance that allows an insurer to pursue a third party responsible for a loss after they have compensated the insured for their claim. This principle helps the insurer to recoup losses, thereby reducing their overall costs and maintaining premium rates for policyholders. Subrogation operates on the notion that the insured should not profit from a loss and that the financial burden should ultimately rest on the party at fault. This principle is commonly applied in liability claims where the insurer can step into the shoes of the insured to seek reimbursement from the responsible party. Question 5. Under the Iowa Insurance Code, which of the following is NOT considered an unfair trade practice? A. Misrepresentation of policy terms or conditions. B. Failing to provide a timely response to a claim. C. Offering a discount on premiums for prompt payment. D. Refusing to pay a claim without a reasonable investigation. Answer. C. Offering a discount on premiums for prompt payment. Explanation. Offering discounts for timely premium payments is generally a common and acceptable practice in the insurance industry aimed at encouraging prompt payment and reducing administrative costs. In contrast, misrepresentation of policy terms, failing to conduct a reasonable investigation of claims, and refusing payment without justification are all classified as unfair trade practices under the Iowa Insurance Code. These practices undermine consumer trust and violate ethical standards in the industry, subjecting insurers to regulatory scrutiny and potential penalties. Question 6. In the context of workers' compensation insurance, which of the following is typically NOT covered? A. Injuries that occur while an employee is traveling for work-related duties. B. Injuries resulting from an employee's intoxication during work hours. C. Medical expenses for treatment of work-related injuries. D. Disability benefits for employees unable to work due to work-related injuries. Answer. B. Injuries resulting from an employee's intoxication during work hours. Explanation. Workers' compensation insurance is designed to provide benefits for employees who suffer work-related injuries or illnesses. However, injuries resulting from an employee's intoxication are generally excluded from coverage. Most states, including Iowa, have laws that deny workers' compensation benefits for injuries incurred while an employee is under the influence of drugs or alcohol, as this behavior is considered a violation of workplace safety standards. Coverage typically includes medical expenses, disability benefits, and lost wages resulting from valid claims, provided that the injuries are not due to the employee's misconduct. Question 7. A homeowner's insurance policy includes a personal property coverage limit of $100,000 with a $1,000 deductible. If the homeowner suffers a loss of personal property valued at $30,000, how much will the insurance company pay after the deductible is applied? A. $29,000. B. $30,000. C. $31,000. D. $1,000. Answer A. $29,000. Explanation. In this scenario, the homeowner's insurance policy has a coverage limit of $100,000 for personal property and a $1,000 deductible. When the loss of personal property is valued at $30,000, the deductible must be subtracted from the total lost amount. Therefore, the calculation would be as follows. Insurance payer equals total loss. Deductible equals 30,000, 1,000, 29,000. As a result, the insurance company will pay $29,000 for the covered loss after applying the deductible. Understanding deductibles and coverage limits is essential for homeowners to effectively manage their insurance needs and expectations. Question 8. Which of the following statements about liability insurance is FALSE? A. Liability insurance covers legal expenses incurred in defending against claims. B. Liability insurance policies typically include coverage for punitive damages. C. Liability insurance protects against claims for bodily injury and property damage caused by the insured. D. Liability insurance does not cover intentional acts or criminal behavior. Answer. B. Liability insurance policies typically include coverage for punitive damages. Explanation. Liability insurance is designed to protect the insured against claims for bodily injury and property damage caused to third parties. While it covers legal defense costs and settlements or judgments for covered claims, most liability insurance policies specifically exclude coverage for punitive damages. Punitive damages are awarded in civil cases to punish the defendant for particularly egregious behavior and deter others from similar actions. Therefore, they are not typically covered under standard liability policies. Understanding the scope and exclusions of liability insurance is crucial for both individuals and businesses in managing their risk exposure. Question 9. Mr. Smith owns a small restaurant and is seeking general liability insurance. He is concerned about potential lawsuits arising from slips and falls on his property. Which coverage should he specifically insure is included in his general liability policy? A. Completed operations coverage. B. Premises liability coverage. C. Product liability coverage. D. Personal injury protection. Answer: B. Premises liability coverage. Explanation: in the context of a restaurant, premises liability coverage is essential for protecting against claims arising from injuries that occur on the property, such as slips and falls. This type of coverage is part of general liability insurance and addresses legal claims that may arise due to unsafe conditions on the premises. Completed operations coverage pertains to liabilities arising from services rendered or completed, while product liability coverage addresses issues related to the sale of goods. Personal injury protection, often associated with auto insurance, does not apply in this scenario. It is critical for business owners like Mr. Smith to understand the specific coverages within their general liability policy to mitigate potential risks effectively. Question 10. Under the principle of utmost good faith, which of the following actions would likely violate this principle in an insurance contract? A. An insurer adjusting premiums based on updated risk assessments. B. An insured failing to disclose prior claims history when applying for coverage. C. A broker providing clients with complete information about policy options. D. An insurance company honoring all claims that fall within the policy limits. Answer: B. An insured failing to disclose prior claims history when applying for coverage. Explanation: the principle of utmost good faith (ubirmi fide) requires both parties in an insurance contract to act honestly and disclose all relevant information. When an insured fails to disclose their prior claims history, they are not acting in good faith, which can result in the insurer denying coverage or voiding the policy. This principle emphasizes the importance of transparency in the insurer-insured relationship. Conversely, actions such as adjusting premiums based on risk assessments or providing complete information about policies align with the principle of good faith. Honoring claims within policy limits also reflects the insurer's commitment to their obligations under the contract. Question 11. Which of the following is true regarding the law of large numbers in insurance? A. It states that an insurer can predict future losses accurately with a small number of policies. B. It allows insurers to determine premiums based on individual risk assessments. C. It ensures that as the number of insureds increases, the actual loss experience will approach the expected loss experience. D. It mandates that all insurers must use the same underwriting criteria for premium determination. Answer: C. It ensures that as the number of insureds increases, the actual loss experience will approach the expected loss experience. Explanation: the law of large numbers is a fundamental concept in insurance that suggests that as the size of a sample increases, the actual results will converge on the expected outcome. This principle enables insurers to predict losses more accurately over a larger pool of insureds. It is crucial for underwriting, pricing, and loss reserving, allowing insurers to manage risk effectively. The law does not imply that insurers can determine premiums based solely on individual assessments, nor does it require uniform underwriting criteria across all insurers. Question 12. A small business owner is evaluating their insurance needs. Which of the following is a critical consideration when determining the appropriate amount of business interruption coverage? A. The owner's personal savings and assets. B. The projected revenue loss during a temporary shutdown due to covered peril. C. The number of employees the business has. D. The type of business structure. G. Sole proprietorship. L. Answer: B. The projected revenue loss during a temporary shutdown due to a covered peril. Explanation: business interruption coverage is designed to compensate for lost income when a business cannot operate due to a covered event, such as a fire or natural disaster. To determine the appropriate amount of coverage, the business owner should estimate the potential revenue loss during the expected downtime. This consideration helps ensure that the policy adequately covers fixed expenses and the profit lost during the interruption. Personal savings and assets or business structure may impact overall risk management but do not directly inform the necessary level of business interruption coverage. Question 13. Which of the following statements about indemnity is false? A. Indemnity aims to restore the insured to their pre-loss financial condition. B. Indemnity allows insureds to profit from their insurance claims. C. Indemnity is a core principle of insurance contracts. D. Indemnity is only applicable to property insurance and not to liability insurance. Answer: B. Indemnity allows insureds to profit from their insurance claims. Explanation: the principle of indemnity in insurance ensures that the insured is compensated for their loss without profiting from the claim. This means that the payment made by the insurer should only cover the actual loss incurred, restoring the insured to their financial condition prior to the loss. Indemnity applies to both property and liability insurance, making option D incorrect. Understanding indemnity is essential for both insurers and insureds to maintain the fairness and integrity of the insurance process. Question 14. Mr. Johnson operates a landscaping business. During a storm, a tree fell onto a customer's car parked on his property. What type of insurance should Mr. Johnson rely on to cover the damages? A. General liability insurance. B. Commercial property insurance. C. Professional liability insurance. D. Workers' compensation insurance. Answer A. General liability insurance. Explanation. In this scenario, Mr. Johnson's general liability insurance would cover damages caused by the tree falling on the customer's car, as it addresses third-party claims for bodily injury and property damage occurring on the insured's premises. Commercial property insurance typically covers damage to the insured's own property and would not apply here. Professional liability insurance covers claims related to professional services provided, while workers' compensation insurance pertains to employee injuries on the job. Understanding the appropriate types of coverage is vital for business owners to protect against various risks. Question 15. Which of the following is a key component of an insurance contract? A. Understanding of the insurer's financial status. B. The presence of legal liability on the part of the insurer. C. Mutual agreement and consideration between the insurer and insured. D. State approval of the contract language. Answer. C. Mutual agreement and consideration between the insurer and insured. Explanation. An insurance contract is legally binding when it contains essential elements including mutual agreement, offer and acceptance, and consideration, something of value exchanged such as premiums for coverage. While understanding the insurer's financial status and legal liability are important considerations in the insurance landscape, they are not necessary elements of the contract itself. Additionally, state approval is not a requirement for the enforceability of individual insurance contracts, though policies must comply with state regulations. Question 16. A client is reviewing their automobile insurance policy and wants to understand what collision coverage typically includes. Which of the following is true about collision coverage? A. It covers damage to the insured's vehicle regardless of fault. B. It covers damages to the vehicle from theft or vandalism. C. It is required by law in all states. D. It only covers damages resulting from hitting another vehicle. Answer A. It covers damage to the insured's vehicle regardless of fault. Explanation. Collision coverage is designed to pay for damages to the insured's vehicle resulting from a collision with another vehicle or object, irrespective of who is at fault for the accident. It does not cover theft or vandalism. Those situations are typically covered under comprehensive coverage. While some states require minimum auto insurance coverage, collision coverage itself is not mandated by law. Understanding the nuances of different types of automobile coverage is essential for consumers to ensure adequate protection for their vehicles. Question 17. Under Iowa law, which of the following is true regarding the insurance agent's fiduciary duty to their clients? A. Agents are allowed to offer advice based solely on personal gain. B. Agents must prioritize the interests of their clients above their own. C. Agents are not required to disclose commission structures to clients. D. Agents have no legal obligation to follow clients' instructions regarding policy selection. Answer. B. Agents must prioritize the interests of their clients above their own. Explanation. Insurance agents have a fiduciary duty to act in the best interests of their clients, which includes providing unbiased advice and recommendations that prioritize the client's needs over their own financial interests. This obligation requires agents to disclose any potential conflicts of interest, including commission structures, and to follow the client's instructions when selecting policies. Understanding these duties is crucial for both agents and consumers to foster trust and ensure compliance with ethical standards in the industry. Question 18. In property insurance, what is the actual cash value (SEV) method used for? A. Calculating premiums based on historical data. B. Valuing a property based on its replacement cost without depreciation. C. Assessing the total loss of property considering depreciation. D. Determining the market value of a property at the time of a sale. Answer. C. Assessing the total loss of property considering depreciation. Explanation. The actual cash value (SEV) method for valuing property takes into account the replacement cost of the item minus any depreciation at the time of loss. This method reflects the item's current market value and is commonly used in property insurance to determine the compensation the insured is entitled to after a loss, It contrasts with replacement cost coverage, which would provide full compensation without accounting for depreciation. Understanding the differences between these valuation methods is essential for policyholders to evaluate their coverage needs effectively. Question 19. Which of the following statements regarding unfair trade practices under the Iowa Insurance Code is true? A. All forms of advertising are prohibited regardless of content. B. Offering a policy that is not approved by the Iowa Insurance Division is considered an unfair trade practice. C. Misrepresentation of policy benefits is acceptable if it is unintentional. D. Insurers may refuse to pay claims based solely on the insured's previous claims history. Answer. B. Offering a policy that is not approved by the Iowa Insurance Division is considered an unfair trade practice. Explanation. Under the Iowa Insurance Code, offering or selling an insurance policy that has not received prior approval from the Iowa Insurance Division constitutes an unfair trade practice. This requirement is in place to protect consumers from potentially misleading or inadequate insurance products. Misrepresentation of policy benefits, even if unintentional, can lead to legal consequences, and insurers cannot refuse claims based solely on past claims history without a valid reason. It is crucial for insurers to adhere to state regulations to maintain ethical practices and protect consumer interests. Question 20. A small business owner is considering obtaining a directors and officers DO insurance policy. What is the primary purpose of this type of insurance? A. To cover the business's general liability exposure. B. To protect the personal assets of corporate officers and directors from claims arising from their decisions. C. To provide coverage for property damage to the business premises. D. To cover the costs of employee injuries on the job. Answer. B. To protect the personal assets of corporate officers and directors from claims arising from their decisions. Explanation. Directors and officers DO insurance is specifically designed to protect the personal assets of company executives and board members in the event they are sued for alleged wrongful acts in their capacity as directors or officers. This type of insurance provides coverage for legal defense costs, settlements, and judgments arising from claims related to decisions made in their corporate roles. Question 21. An individual is injured while attending a public event and decides to sue the event organizer for damages. What type of insurance would best protect the organizer in this situation? A. Professional liability insurance. B. General liability insurance. C. Umbrella liability insurance. D. Event cancellation insurance. Answer. B. General liability insurance. Explanation. General liability insurance covers claims of bodily injury and property damage occurring on the insured's premises or due to their operations. In this case, it would protect the event organizer from claims arising from injuries sustained by attendees during the event. Professional liability insurance is intended for professionals providing advice or services, while umbrella liability insurance provides additional coverage beyond the limits of existing policies. Event cancellation insurance protects against financial loss from an event that must be cancelled, not liability for injuries. Question 22. Which of the following factors is typically NOT considered when determining an insurance applicant's risk classification? A. The applicant's credit history. B. The applicant's age and driving record. C. The applicant's employment history. D. The applicant's health status. Answer. C. The applicant's employment history. Explanation. What credit history, age, driving record, and health status are common factors in risk classification for insurance underwriting. The applicant's employment history is typically not a primary consideration. Insurers focus on elements that directly affect the likelihood of a claim, and factors like driving record and health status provide insights into the applicant's risk profile. Question 23. Under Iowa law, an insurance company is required to provide which of the following if it decides to cancel? A policy, A. Immediate cancellation without notice. B. A written notice of cancellation at least 30 days before the policy's termination. C. A verbal notice to the insured. D. An option for the insured to appeal the cancellation decision. Answer. B. A written notice of cancellation at least 30 days before the policy's termination. Explanation. Iowa law mandates that insurers provide a written notice of cancellation to the policyholder at least 30 days prior to the termination of the policy, allowing the insured time to seek alternative coverage. This requirement is part of consumer protection regulations to ensure that policyholders are informed and can adequately prepare for the loss of coverage. Immediate cancellation or verbal notifications are not compliant with these regulations. Question 24. Which of the following is considered a peril in property insurance? A. Wear and tear on property. B. Flood damage caused by a natural disaster. C. Decrease in property value. D. Theft of personal property. Answer: B. Flood damage caused by a natural disaster. Explanation: in property insurance, a peril refers to a specific risk or cause of loss covered by the insurance policy. Flood damage from a natural disaster is a recognized peril under certain policies, particularly flood insurance. Wear and tear and decrease in property value are generally not covered as they are related to maintenance and depreciation rather than specific events. Theft is although a peril, but it is not related to a natural disaster, making flood damage a clearer example of a peril. Question 25. Which of the following is not a requirement for an insurance contract to be considered legally enforceable? A. The parties must have the legal capacity to enter into a contract. B. The contract must be in writing. C. There must be mutual consent between the parties. D. There must be a lawful object or purpose for the contract. Answer: B. The contract must be in writing. Explanation: while it is often advisable for insurance contracts to be in writing, it is not strictly required for an insurance contract to be legally enforceable, as verbal agreements can sometimes be binding as well. The other elements, legal capacity, mutual consent, and a lawful object, are essential for creating a valid and enforceable contract. Question 26. A business owner is considering workers' compensation insurance. What is the primary purpose of this insurance? A. To provide health insurance benefits to employees. B. To cover lost income for employees unable to work due to injury. C. To protect the business from lawsuits filed by injured employees. D. To pay for employee training and safety programs. Answer: C. To protect the business from lawsuits filed by injured employees. Explanation: workers' compensation insurance provides benefits to employees who suffer job-related injuries or illnesses, covering medical expenses and lost wages while protecting employers from lawsuits resulting from those injuries. While it does offer income replacement and medical benefits, its primary function is to limit the employer's liability in the event of workplace injuries. The other options listed do not accurately reflect the main purpose of workers' compensation insurance. Question 27. An individual is seeking coverage for their home and personal belongings. Which type of policy would be most appropriate for comprehensive protection? A. Basic form homeowners policy. B. Broad form homeowners policy. C. Special form homeowners policy. D. Tenants policy. Answer: C. Special form homeowners policy. Explanation: a special form homeowners policy typically provides comprehensive coverage for the dwelling and personal property against all perils except those specifically excluded in the policy. This type of policy offers broader protection than basic or broad form policies, which may cover only specific perils. A tenant's policy is designed for renters and does not cover the dwelling itself. Homeowners seeking extensive coverage should consider a special form policy for optimal protection. Question 28. In a business owner's policy (BOP), which of the following coverages is typically included? A. Personal property of employees. B. Coverage for intellectual property. C. General liability coverage. D. Coverage for directors and officers. Answer: C. General liability coverage. Explanation: a business owner's policy (BOP) typically bundles several types of coverage for small to medium-sized businesses, including general liability coverage, which protects against third-party claims for bodily injury and property damage. BOPs may also include property coverage for the business's physical assets, but they usually do not cover personal property of employees, intellectual property, or specific coverage for directors and officers, which would require separate policies. Question 29. Which of the following describes the coinsurance clause in property insurance? A. It specifies the maximum amount the insurer will pay for a loss. B. It requires the insured to maintain coverage equal to a specified percentage of the property value. C. It allows the insurer to cancel the policy if the insured fails to pay premiums on time. D. It provides additional coverage for specific high-value items. Answer: B. It requires the insured to maintain coverage equal to a specified percentage of the property value. Explanation: the coinsurance clause in property insurance typically requires the insured to carry coverage equal to a certain percentage, often 80%, 90%, or 100% of the property's value. If the insured fails to meet this requirement, they may face a penalty in the event of a loss, resulting in a reduced claim payment. This clause is designed to encourage policyholders to insure their properties adequately and mitigate underinsurance risks. The other options do not accurately reflect the purpose or function of the coinsurance clause. Question 30. What is the primary purpose of a premium audit conducted by an insurance company? A. To increase the premium rates for all policyholders. B. To evaluate the insurer's financial stability. C. To verify the accuracy of the insured's reported information. D. To assess the claim history of the insured. Answer: C. To verify the accuracy of the insured's reported information. Explanation: a premium audit is conducted by insurance companies to assess the accuracy of the information provided by the insured regarding their operations, payroll, or property values. The audit ensures that the premium charged reflects the actual risk exposure and helps identify any necessary adjustments to the premium for future policy terms. It is not designed to increase rates for all policyholders or evaluate the insurer's financial stability directly. Assessing claim history may be part of the underwriting process but is not the primary focus of a premium audit.